Hello everyone, this is Lily Chilton. Welcome to our webcast. Today's topic is IRS alerts in relation to virtual currency, owners, non-filing consequences. So, for a copy of this recording, we'll be uploading a copy of this webcast on our YouTube channel by tomorrow, August 6th. Please do subscribe to our video and news blogs through our website and our social media. We have YouTube channel, Twitter, LinkedIn, Facebook accounts. So let's begin. The notice that was sent out last month in relation to this topic confirms that trading cryptos is a taxable event, because before Section 1031 of the IRS Code, before the new tax law went into effect in 2018, could have been and was by some interpreted to allow for an exchange of one digital currency for another, like buying ETH for or with Bitcoin, was tax deferred. That you will only get taxed if you dispose of that property. There has been much debate about this among accountants and tax attorneys, with valid arguments on both sides. Now, this is a different topic that we're going to cover some other time. Okay. So, the Internal Revenue Service has begun sending letters to taxpayers with virtual currency transactions that potentially failed to report income and pay the resulting tax from virtual currency transactions, or did not report their transactions on property. Now, taxpayers should take these letters very seriously by reviewing their tax filings and, when appropriate, amend past returns and pay back taxes, interest, and penalties. The IRS is expanding efforts. I'm telling you, IRS is very serious about this. The IRS is expanding efforts involving virtual currency, including increased use of data analytics. They actually hired a lot of, believe it or not, high-profile IT specialists so they are current with the technologies, so they can catch all those active trading cryptocurrency taxpayers to pay their taxes if and whenever they are due. IRS is focused on enforcing the law, and as you can see on here, let me see, IRS is focused in enforcing the law. They actually launched a virtual currency compliance campaign within its large business and international division last year, to educate taxpayers on their to educate taxpayers to fully understand and meet their obligations. So IRS started sending these educational letters in July 2019. So by the end of August, more than 10,000 taxpayers will receive these letters. The names, you would ask, where did the IRS obtain these letters, right? The names of these taxpayers were obtained through various ongoing IRS compliance efforts. Now, when you say compliance efforts, this has something to do with, exchanges filing their information compliance returns. For example, the 1099Ks or 1099Bs that they were supposed to send out to taxpayers if those taxpayers are within the filing threshold limitations. So that is what the various ongoing IRS compliance efforts mean. Okay, so you're going to ask, how will IRS know that I have a compliance requirement that I did not file? Well, I'm going to show you where to look. If you received Letter 6173, Letter 6174, and Letter 6174A. I'm going to show you what those letters look like and a few tips on how to respond to them. So IRS believes the tax agency is ahead of the curve when it comes to cryptocurrencies. Actually, they are right about this. Usually they are behind by 4 years. This time they're not. So because of the criminal compliance that this has to deal with, they are actually ahead of the curve. So if talking about criminal prosecution, go to or refer to Title 26 IRS Tax Code and Title 31 US Tax Code, vice versa. You will get more information about the criminal tax implications, criminal implications of failing not to report or failing not to claim your cryptocurrency transactions. So what's the difference between IRS Letter 6173, 74, and 74A? So Letter 6173 requests a signed response from the taxpayer in regard to alleged non-compliance. This one, because you have to sign, I recommend use a tax practitioner, tax attorney, or a professional with expertise far as cryptocurrency tax filing is concerned, because of the criminal implications of not doing or of the errors that, if you filed it but then there's a mistake on your return, then there's a penalty on that as well. So you got to make sure that you have an expert advice in dealing with these letters. IRS Letter 6174A notifies the taxpayers that there is potential misreporting concerning cryptocurrency transactions, and the IRS may enforce criminal prosecution. Now let's go to 6173. I actually put a link on here. Just copy this and you will be able to get a copy of this letter straight from the IRS website. So letter 6173. Now here's the part that is really, really important here. It says why we are writing to you. We have information that you have or had one or more accounts containing virtual currency and may not met your U.S. tax filing and reporting requirements for transactions involving virtual currency, which include cryptocurrency and non-crypto virtual currency. When it says non-virtual cryptocurrency, has to do with maybe you received a 1099 that is on your transcript, but it's not recorded on your income tax return. Then that's what it's meant by that. But for cryptocurrency, might have to do with 1099, 1099B, 1099K, or that is on your income transcript, but that's not on your income tax return. So they said we have information that you have. That means IRS has information. So I suggest for you to, in order for you to respond to this, I suggest hire a tax attorney, especially if you are one among those high profile taxpayers. When I say high profile, like hundreds of thousands in tax liabilities and penalties with criminal tax implications. Get a tax lawyer, or make sure to get a tax expert advice from somebody that you can rely on to defend you properly if it comes to that. Okay, so 6173 requires you to sign this, right? To sign this, attach it to one of these actions that you have to do. So you have 3 options here that you have to do. If you failed to file one or more income tax returns, then file that delinquent return along with your virtual currency transactions as soon as possible. and attach it to that. Okay, attach page 2. This is page 1, this is page 2. Attach this, signed along with your income tax returns. If you made a mistake on your income tax return and such as not reporting your virtual currency transactions or incorrectly calculating, then file an amended tax return with page 2. Okay, if after reviewing your filed tax returns and you believe that you followed all tax and information reporting requirements, then you write a letter statement with bullet points stating, hey, you know what, explain the actions you took to become compliant with US reporting requirements, and then attach page 2. Okay, your contact information, including your telephone number, complete address, and the following, and the address where you receive mail if different from the one that is reported on your income tax return. So you have 3 options to follow, and then attach this form. You have to attach this form. Now, it is very important for you to respond on the by due date of this letter. Not responding means that you have ignored it, and IRS really hates being ignored. So if you did not report, then if we don't hear from you by the respond by date, we may refer your tax account for examination. There you go, you get an audit. So if you report and you send your response on that about this letter, then you may or may not get an audit. But if you do not respond, you definitely will get an audit. Okay, so now let's go to Letter 6174. Letter 6174 simply asks the taxpayer to review their past returns and, if necessary, file an amendment. Now here's the difference between 6173, right? 6173 requires you to submit your response in relation to that letter, along with your corrections. File your tax return, file an amended return, or write a statement information, and then attach page 2. But 6174, they're basically telling you, okay, review your tax return, and then if you have any corrections that you want to do, attach that when filing amended or delinquent returns. Write letter 6174 if you want to add Schedule C, Schedule D, or Schedule E. Okay, Schedule C, these are the common schedules for reporting virtual currency transactions. Your tax practitioner should know this. You don't have to worry about this, but I suggest you gotta be very honest with whoever tax expert you're working with, because not knowing, and then you go to an audit examination, not knowing will only put you in so much more trouble. It is best to always be honest with your tax practitioners or with your tax expert professionals. So as what was mentioned earlier, why we're writing to you, we have information. They have that information. That means that on your income tax transcript, they have this information. You either file a return that, if you compare your IRS transcript with your tax return, there is a income transcript on there that they have on their file, but it's not on your income tax return. So it is very important that you get a copy of your transcript. Compare your tax return against your transcript, and then that's the only way that you'll find out what it is do they have that you do not have on your tax return. Does that make sense? Is that clear? Hope it is. Your tax practitioner, tax professional should know what I'm talking about. All you gotta do is, hey, can you please compare my transcript? Tell me what IRS is asking for. That's the only way that you're going to figure out how to respond to them. You gotta know what the enemy has on you, and that is the best that's the only possible way for you to create an action plan for us how to respond to them. Okay, so right here's a guideline. They actually provided guidelines. If you were, for Schedule C, if you were an independent contractor and received payment in virtual currency, you must report it in gross income for the amount of the virtual currency's fair market value, measured in US dollars, as of the date in time you received the virtual currency. When it says the date and time of virtual currency, they added the time, because virtual currencies are very volatile. The price changes every second of the day, so you got to make sure that you have that actual, or at least very close to the fair market value of that virtual currency when it was used to get you paid. Okay, so that's what it means by date and time. Schedule D, if you sold, exchanged, or disposed of virtual currency. Schedule D is for sale of assets and disposition of assets. If you have sold, exchanged, or disposed, this is what is used. For Schedule E, if you receive supplemental income in the form of virtual currency. For example, you have a partnership form of company, an S corporations, or a real estate property, wherein you use Schedule E to report your income and transactions, then that is what it's meant by this. If your S corporation, your partnership, or your rental property, or your rental property account received a payment, or if you have any transaction that involves virtual currency, then that's, you use Schedule E for that. Your tax practitioner should know this. You should not worry about this. All you gotta do is just be honest with your tax expert, whoever you're going to use. Okay, so that's 6174A. 6174. 6174A notifies the taxpayer that there is potential misreporting concerning cryptocurrency transactions, and the IRS may enforce criminal prosecution. You say, why criminal prosecution? Okay, as mentioned earlier, you have to refer to Title 26 and Title 31 of the U.S. Code and the IRS Tax Code. That is where the criminal aspect of it is linked. Okay, that is a separate topic that needs to get discussed on future webcasts. So 6174A is almost basically the same as 6174. So it has the same, why we're writing, the reason why they are writing to you, guidelines as to how you're going to report virtual currency transactions, common schedules that is used for virtual currencies, and here they added a supplemental form 8582. So, okay, if you have additional, if you require additional clarification, please do not hesitate to contact us. Our contact information will be at the end of this webcast. Now, I have added the IRS Notice 2014. This was the first guidelines that were sent out by IRS way back in 2013. So, Section 1. This notice describes how existing general tax principles apply to transactions using virtual currency. So, please read through this. Right, and they actually, on Section 4, they actually added the frequently asked questions. So going to, okay, right here on the second paragraph of Section 2, Virtual currency that has an equivalent value in real currency or that acts as a substitute for real currency is referred to as convertible virtual currency. Bitcoin is one example of a convertible virtual currency. Bitcoin can be digitally traded between users and can be purchased for or exchanged into US dollars, euros, and other real or virtual currencies. Okay. FinCEN is a different topic that we're going to discuss at a future date. Section 3. In scope, in general, the sale or exchange of convertible virtual currency or the use of convertible virtual currency to pay for goods or services in a real-world economy transaction has tax consequences that may result in a tax liability. Okay, this notice addresses only the U.S. federal tax consequences of transactions in or transactions that use convertible virtual currency and the term virtual currency as used in section 4. Okay. So this is a copy basically of the IRS. If you click on this, the IRS Notice 2014-21 that involves virtual currency transaction. Now on the next few slides, you're going to see frequently asked questions that is attached to 2014-21. So example of this questions is, how is virtual currency treated for federal tax purposes? The answer is virtual currency is treated as property. Okay. Question 2, is virtual currency treated as currency for purposes of determining whether a transaction results in foreign currency gain or loss under U.S. federal tax laws? Answer: no. Under currently applicable law, virtual currency is not treated as currency that could generate foreign currency gain or loss. Now, you guys have to work like I mentioned earlier, you have to work closely with your tax practitioners on this, because we actually have studied this, and we actually went through examinations with IRS in relation to updated tax rules and regulations. So section 4. So if you go through all of this, the following slides, section 4, must a taxpayer who receives virtual currency as payment for goods or services include in computing gross income the fair market value of the virtual currency? Answer is yes. As described before, it is part of your gross income. What is the basis of virtual currency received as payment for goods or services? Okay, now the basis. Okay, in discussing this, there's actually different. There's an adjusted base value, but for the purpose of this, we're going to stay on the fair market value. The adjusted basis of an asset, you have to work closely with your tax expert in relation to that. The basis of virtual currency that a taxpayer receives as payment for goods or services is the fair market value of the virtual currency in US dollars, meaning what is the current price of that virtual currency when it was used during that transaction. If I gave you tax preparation service and you paid me in Bitcoin, and my tax service is at $3,500, then if you paid me $3,500 worth of Bitcoin, then the fair market value of that transaction is $3,500 to the last cent. Getting me? How is the fair market value of virtual currency determined? Okay, for U.S. tax purposes, transactions using virtual currency must be reported in U.S. dollars Therefore, taxpayers will be required to determine the fair market value of the virtual currency. This is on the date of payment or receipt of the transaction. Okay, so if a virtual currency is listed on an exchange and the exchange rate is established by market supply and demand, the fair market value of the virtual currency is determined by converting the virtual currency into US dollars. Question 6. Does the taxpayer have gain or loss upon an exchange of virtual currency for other property? Yes. Okay, this goes to the Schedule D. So this is calculated on your Schedule D. What type of gain or loss does a taxpayer realize on the sale or exchange of virtual currency? The character of the gain or loss generally depends on whether the virtual currency is a capital asset in the hands of the taxpayer. Now, there's a lot of factors to consider when you calculate the gain or loss. Like, for example, how was the currency used? What type of transaction is it? Or what type of, if you paid it as payment for service, then that is an ordinary loss. If you used it as an asset and you disposed of it as an asset, then that's a capital gains or loss transaction. So there's difference to it. So you really gotta work closely with your tax practitioner on this. I am providing this frequently asked questions just for your reference only, but you still need to work closely with your expert tax practitioner. Does the taxpayer who mines virtual currency realize gross income upon receipt of the virtual currency resulting from those activities? Yes. Okay, when a taxpayer successfully mines virtual currency, the fair market value of the virtual currency as of the date of the receipt is includable in gross income. Is an individual who mines virtual currency as a trade or business subject to self-employment tax on income derived from those activities? Okay, now, as I said, there's different factors to transactions, so depending on your best tax position, let me see. If a taxpayer's mining of virtual currency constitutes a trade or business and the mining activity is not undertaken by the taxpayer as an employee, the net earnings from self-employment resulting from those activities constitutes self-employment income. There's different guidelines for us trades or business. This is not a black and white. This is not a black and white question. So that's why it says if a taxpayer. So there are options that you can undergo or undertake in order for you to take the best possible tax position while being compliant with your requirements to file your information returns. So you gotta work closely with your expert tax practitioner on this. Does virtual currency received by an independent contractor for performing services constitute? Yes, this will always be yes. Okay. Generally, self-employment income includes all gross income derived by an individual from any trade or business carried on by the individual as other than an employee. Consequently, the fair market value of virtual currency received from services performed as an independent contractor, measured in US dollars as of the date of the receipt, constitutes self-employment income and is subject to the self-employment tax. Thus, virtual currency paid by an employer as remuneration for services constitute wages. Yes. If it's used as a wage, yes. Generally, the medium in which remuneration for services is paid is immaterial to the determination of whether the remuneration constitutes wages for employment tax purposes. Is payment made using virtual currency subject to information reporting? A payment made using virtual currency is subject to information reporting to the same extent as any other payment made in property. For example, a person who is in course of a trade, like for example, I provided you tax preparation and you paid me virtual currency, right? So that is basically the same as using cash. So examples of payments of fixed and determinable income include rent, salaries, wages, premiums, annuities, and compensation. Compensation right there. Okay. Okay. Is a person who is in the course of trade or business, as you can see, all of these questions are kind of repetitive. They're basically rephrased. So bottom line, if you received compensation for your services, that is part of your gross income. Okay. If you bought or traded cryptocurrency or virtual currency for another cryptocurrency, that is a taxable event, right? If you used a cryptocurrency to pay an employee, that is what do you call this? That basically becomes part of a wage of that person. Okay, so question 13, is a person who is in the course of a trade or business makes a payment using virtual currency with 600 or more to an independent contractor for performing services required to file an information return with the IRS? Actually, yes. Yes, if it's $600 or more, because you are within that limitation, the threshold limitation. Generally, a person who is in the course of a trade or business makes a payment of $600 or more in a taxable year to an independent contractor for the performance of services is required to report that payment to the IRS in the payee on Form 1099 miscellaneous. Payments of virtual currency required to be reported on Form 1099 miscellaneous should be reported using the fair market value of the virtual currency in the US dollars as of the date of payment. Okay, so it has the same threshold limitations as to filing the 1099-C. It's basically the same as paying cash to somebody if you paid $600 or more. So if you paid somebody that is over $600, yes, you gotta file 1099-C. Are payments made using virtual currency subject to backup withholding? Technically yes. Technically yes, especially payments made using virtual currency are subject to backup withholding to the same extent as to other payments made in property. So if it is technically the same as using cash, if you have an independent contractor and you're not sure if the main reason for withholding backup for doing backup withholding is you don't want to be liable for that backup withholding for that person, because now there is a rule that the employers become liable to pay for that backup withholding for if let's for example, I hired independent contractor A, and then when I filed 1099 1099 miscellaneous. Come to find out, this person provided you an incorrect EIN number, a tax identification number. Now you received a letter from IRS stating that, okay, there is a incorrect information on here. And then if IRS gives you an instruction, you have to take out 28% backup withholding for this person. Now, in by law, you're supposed, if you took that backup withholding from that person, you're supposed to send that backup withholding back to IRS. So basically, you're just collecting for IRS to make sure that that person actually paid for his backup withholding. If you fail to follow that rule, you will be the company liable to pay for that backup withholding for that person. The payer must back up withholding from that payment if the tax ID is not obtained prior to payment, or if the payer receives notification from the IRS that backup withholding is required. Are there IRS information reporting requirements for a person who settles payments made in virtual currency on behalf of merchants that accept? This is what I was talking to you earlier. The 1099K. In virtual currency on behalf of merchants that accepts virtual currency from their customers. Yes, if certain requirements are met. In general, a third party that contracts with a substantial number of unrelated merchants to settle payments between the merchants and their customers is a third-party settlement organization. For example, Coinbase. You have an account in Coinbase. You bought Bitcoin, but you used your credit card, right? So by using your credit card, that activates the third-party settlement organization, TPSO. So that means that this credit card company is required to report payments made to a merchant on a Form 1099K payment, okay? Payment card and third-party network transactions. This is what that is for, the TPSO. That's why if and whenever you do transactions, never ever use credit card. Never ever use credit card unless that is what you prefer, okay? Will taxpayers be subject to penalties for having treated a virtual currency transaction in a manner that is inconsistent with this notice? Actually, yes. So taxpayers may be subject to penalties for failure to comply with tax laws. Okay. So that is all of the frequently asked questions. I know that there are other questionable items there that needs clarification from IRS. If you have additional, if you need additional information, clarification, or if you would like to discuss about your business, please do not hesitate to contact us. Our website is www.cpa-consultants.com. You can email us your information at info@cpa-consultants.com, or you can call us at 310-800-1932. Follow us through Facebook please do follow us. We invite you to follow us on our Facebook. We have Twitter accounts as well. This way you will get updated notices, newsletter updates, video blogs, and everything without searching for the information that you needed on YouTube. So for that, I would like to thank you for joining us. Thank you very much, and we love you very much. Again, do not hesitate to contact us. We are here to answer every questions that you might have in relation to this topic. Thank you and have a good day. Bye.